Hello friends, welcome back to our channel. If you're new here, just make sure to leave a like. These days, it is impossible for us to imagine how a person can be very rich, even richer than the richest person in the world, and not pay any tax. In fact, the top 10 richest people in the world have a combined total of $1.46 trillion, yet they seem to be getting wealthier by the day. The most popular way rich people avoid paying taxes is by keeping their wealth in places where there are no income or capital gains taxes. Monaco is a small European nation with a population of only 38,000 people. A trust fund is basically a legal entity that holds assets for the benefit of another person. When you donate money to a qualified non-profit organization, you receive a tax deduction. These are debt securities issued by state and local governments that are exempt from federal income tax. Investing in these bonds can provide a steady stream of income without having to worry about paying taxes on it. However, it is important to remember that tax planning should not be done in a way that violates tax laws or ethical standards. We've probably all heard of Switzerland, the classic tax haven. But did you know that there are many other countries that offer similar benefits? Take, for example, Singapore, known for its strong economy and political stability. The country has no corporate income tax, capital gains tax, or inheritance tax, making it an attractive destination for businesses and wealthy individuals alike. Or consider the Cayman Islands, a popular destination for international business companies. The islands offer a wide range of tax incentives, including a territorial tax system, which means that only income earned within the territory is subject to tax. There are also countries like Panama and Costa Rica that offer generous tax breaks to encourage investment and economic growth. While tax havens can be a useful tool for individuals and businesses looking to reduce their tax burden, it is important to do your research and choose a reputable jurisdiction that aligns with your values and goals. Additionally, it is crucial to ensure that your actions are in compliance with all applicable laws and regulations to avoid any legal issues down the road. Rather, it should be approached strategically to ensure long-term financial success while complying with all relevant regulations. Please don't forget to leave a like if you're not already. See you in the next one. Ultimately, by following these tips and working with qualified professionals, the rich can not only save money on taxes, but also set themselves up for greater financial success in the future. Another option is through real estate investment trusts, or REITs. REITs are companies that own and operate income-producing real estate. They are required to distribute at least 90% of their taxable income to shareholders in the form of dividends, which can provide a nice tax-efficient source of income. Additionally, there are various tax-advantaged retirement accounts, such as 401s and IRAs, that allow individuals to invest in a tax-deferred manner. This means that you won't have to pay taxes on your investments until you withdraw the money in retirement. Tax-efficient vehicles can be a great way for the rich to save on taxes. But it is important to work with a financial advisor to determine which options are right for you based on your individual circumstances. The amount you can deduct varies depending on the type of donation and the organization you donate to, but it can add up to significant savings for wealthy donors. It is important to be aware of all the deductions that you may be entitled to in order to reduce your taxable income and ultimately your tax bill. One common deduction that many wealthy individuals overlook is the home mortgage interest deduction. This allows taxpayers to deduct the interest they pay on loans used to purchase a primary residence, vacation home, or rental property. Another important deduction is the charitable contribution deduction. As mentioned earlier, donating to charity is a great way to save on taxes. But it is important to keep track of your donations throughout the year in order to claim the deduction accurately. Tax credits are another valuable tool for reducing your tax liability. Unlike deductions, which reduce your taxable income, credits directly reduce the amount of tax you owe. One example of a tax credit that may be available to wealthy individuals is the investment tax credit, which offers a credit of up to 26% for investments in certain types of properties such as solar panels or wind turbines. Claiming all available deductions and credits can be complex, but it is important to work with a tax professional to ensure that you'll be taking advantage of every opportunity to reduce your taxes legally and ethically. For example, if you donate $1 million to a charity that qualifies for a 30% tax credit, you would save $300,000 in taxes. But it is important to note that donating to charity should not be seen as a way to avoid taxes. Rather, it should be viewed as an investment in making a positive impact on society. The assets in a trust fund are managed by a trustee who is responsible for investing them in such a way that they grow over time and provide income for the beneficiary. Trust funds can be structured in different ways, but generally speaking, they offer several advantages over other types of investments. First, Trust funds are often used to reduce estate taxes, which are levied on the value of a person's assets when they die. By placing assets in a trust fund, wealthy individuals can ensure that their heirs receive their full share of the estate without having to pay hefty taxes on it. Second, trust funds can also help avoid probate, which is the legal process of distributing a deceased person's assets. Probate can be lengthy and expensive, but assets held in trust funds are typically distributed more quickly and easily. Finally, trust funds can provide greater privacy than other types of investments. The details of a trust fund are not public record, so the beneficiaries' identities and the size of the fund are kept confidential. This can be appealing to wealthy individuals who want to keep their finances out of the public eye. Overall, trust funds are a popular choice among the rich and famous for reducing their tax burden and ensuring the smooth distribution of their assets after their death. It has no corporate income tax, capital gains tax, or wealth tax, making it an ideal place for storing money. There are no taxes at all. Of course, if you want to visit or settle in Monaco, you have to be prepared to spend a lot of money on real estate. So unless you're ready to invest millions of dollars into a piece of property in Monaco, it may not be worth your while to move there just to save on taxes. For now, though, it is still one of the best places for the super rich to stash away their cash without worrying about any tax authorities catching up to them. Where did they get all that money? How does their wealth increase even when there's no economic growth? Well, they're really just good at shifting their assets around so that they do unattract attention from the IRS or tax authorities in other countries. This is because wealthy individuals know how to keep their money hidden from the government, and it is not easy to figure out where all that money goes. In this video, we will talk about some of the creative ways that the super rich hide their money, so that they never have to worry about paying taxes ever again. Offshore accounts are also another great option for those who want to keep their money safe from the prying eyes of tax collectors. Offshore accounts are bank accounts held in countries with strict banking laws, prohibit financial institutions from sharing customer information with foreign governments. Many wealthy individuals choose to keep part of their assets in offshore accounts in order to reduce their overall tax burden. These accounts are especially useful for businesses, as they allow companies to take advantage of lower tax rates in other countries, while still operating primarily within their home country. Setting up an offshore account isn't exactly difficult, but it can be time-consuming and expensive. That's why it's usually only the ultra-wealthy who bother with this kind of thing. Another great option for the rich and famous looking to avoid taxes is to set up a trust fund. Donating to charity is another great way for the rich to save on taxes. Investing in tax-efficient vehicles is another great way for the rich to save on taxes. One example is through tax-exempt bonds. Claiming all available deductions is another important tip for the rich who want to save on taxes. By following these tips, the rich can minimize their tax burden and keep more of their hard-earned money in their pockets. There are also a lot of tax havens that rich people use to hide their money. Thank you for watching this video. We hope that you enjoyed it and learned something new.